It's a new month and it's a new quarter. You're watching the Stock Market Brief Show where we give a quick report on the overall markets. Today, we're going to talk about some of the data that came out, what it looks like for Fed cuts. We're going to go over some of the intermarket charts, give you an idea of what's going on there. And most importantly, we're going to talk about some of the market conditions and some key levels there. We got a lot to discuss, so let's go ahead and get right into it. All right, everybody, welcome back to the show. First off, I got to start with this because every quarter, every month, I give out new expected moves. What's the market pricing in for the week ahead, month ahead, quarter ahead, etc. And as you can see here, I just thought this was so crazy. The S&P 500, right? We closed out Q3, end of September. It's a new quarter, October, starting Q4. Q3, we closed at 6688.47, 6,688.47. This was posted June 30th at 2:48 p.m. June 30th, going into the new quarter. Look at the upper level right there, 6688.26. We're talking over a $6,000 product, and price basically closed slam right on the upper quarterly S&P 500 expected move. These levels are important to know because it's the market pricing in risk looking forward. So we're going to go ahead and give you those updated ones later on in this show, and the new monthly ones, kind of give you some thoughts around all that as well. Today, how did the 1st of October start out? Well, we had healthcare leading the way big time. That's a huge day in healthcare. It's getting healthcare alerts 24/7 there all day long. 3% up there. Technology was not too far behind, up 1%. And then we had communication services, the lagger. Everything was green across the board, but overall, it's just slow day. It's a low vol up day, right? Up 33 basis points, 34 basis points in the S&P 500. And we didn't have any outstanding, performance overall, but we did have an up day. Now there is news that the government has shut down, which means we may get some delayed reports here as far as a macro goes. So be aware of that. The market clearly shrugged this off, and obviously it can matter if it holds closed longer and longer and we miss out on more stuff, and then there's problems that arrive, but that's not really where we are right now. We just got to watch how the market currently is responding and reacting. That's what's going on there. We did get some data here. We had ADP launched their national employment report, and we had in private employment, we had minus 32,000, which was, a significant decline versus expectations of, 50,000 was consensus. But that's not even, that's one thing that's big, but there's also another surprising thing that maybe you haven't heard of. But the last report, the actual was 54,000, and that got revised down to minus 3,000. So perhaps, right, this is the market's way. What the market did today was responding in kind to this, saying that we're going to be getting another rate cut. And you can see over here, October is basically pricing in a full rate cut at 99% probability that we're going to get a 25 basis point cut there. And then into December, it's an 89% probability that we get another 25 basis point cut. SM PMI, SM manufacturing PMI did come out here as well. We saw a little bit of an uptick, but it is still under 50, which means we're still within that contractionary period. How did some of the intermarket assets play out today? Oil was down. We're kind of coming back, testing this lower area down here where we bounced from before. But as oil slips, that could be positive for bonds. It could be negative for the yields. Yields were down slightly today. Bonds were up. What was dollar doing? Dollar slightly down on the trading session. And now guess what? People are starting to notice the analog that the dollar is playing out from the first year Trump was in office to now this first year on his second term. And what I mean by that is, if you look at this chart that I saw floating around, the yellow line is the Trump's first year in office. And we pointed this out on many shows throughout this year. And this is one of the reasons why I said China could be a potential good play in an interview that I did at the NASDAQ. So now where are we? Well, we're right over here, right? The dollar is breaking out. September, right? Put in the low. We're backed out. We're back testing. So if this is going to hold true, we might see some dollar strength here in the near future. And that's important to know because of this, right? When you have a strengthening dollar and 10-year yield, it typically puts pressure on the S&P 500 and other various assets it's negatively correlated to. For example, look at the dollar right over here. When it found the low, we broke up higher, and the 10-year yield from that point went a little bit higher as well. Okay, the S&P 500, what did it do? Came back down, didn't go anywhere. And up until recently, right? We just started seeing these come off a little bit here after their recent run up. And since these are coming down, what's the S&P 500 doing? It's breaking out to a new all-time high. While this is taking place, we also have gold kind of going, I would say, in parabolic fashion over here. Did put in somewhat of a reversal candle, but we're not too far away from that 4,000. We'll see if gold wants to do that before any consolidation, but we'll probably get some consolidation here at some point. I don't know what gold is trying to price in here or what it sees, what the market sees, but it is getting to the point of concern if we don't get these consolidations. Same thing with silver. Silver is about a stone's throw away from its 2011 high, where we hit over $50. Still very, very strongly correlated to miners. So just be aware of that if anything were to happen, if silver were to kind of find its top in the near future and then start heading down, that's probably going to take the miners out with it. As far as the sailor to shift tool goes, we did see Bitcoin head higher today into and around 118,000, and yet we still don't have the buy signal, buy trigger according to this, but we are seeing strength as Bitcoin is kind of just consolidating in and around these levels. You can see that we're kind of coming back up to this level where kind of this zone here, actually, I'll draw out kind of a square here, this 115 to 117 range where we held it as support, we broke down, we came back through, right, and we just kind of chunking along in this middle kind of range here as Bitcoin is rather range bound. So we'll see if this is enough to give us a signal and start heading higher, or if we're just seeing a little pop up higher and seeing what happens after that. XLU relative to the S&P 500, utilities is outperforming the S&P 500 right now. You are seeing a positive 4-week rate of change, and the reason why I'm bringing this up is because you can see that when we see this, there is a possibility, there's a higher possibility for volatility to occur. This is based off of the beta rotation strategy. Michael Gaia did a lot of research behind this, and you can just pull up a chart and you can see the times that we flip above it, right? There's a higher probability that volatility may arrive in the very near future. It doesn't guarantee it, but it does suggest a higher probability of that. S&P 500 did hit into a new all-time high today, closed outside of 6,700, and we still remain within this bullish channel, and we still have a bearish divergence currently forming right now. And this is what I found interesting here too, is July, this day right here, July 1st, that was the low for the entire month of July, right? Day one. August, right? Day one, that was the low of the entire month. Then September came, that first day of September, that was the low for the entire month. Okay, is October going to follow this path? If so, that means that the low, 6656, can't get taken out, which, 3-4 times in a row is pretty crazy. And you can see that that's still within this bull channel, but just be aware that there's just an interesting pattern. And when we've come down here on some of those days, it still holds this overall trend. And it's been very positive for the markets, positive for other stocks. For me, right, I've been increasing my cash position. And then when I see a good name, I might take it. But overall, I have been reducing exposure. And that does not mean getting bearish. As you can see here, August to September, this entire month, I closed at all-time highs in my portfolio, and it was a steady, nice curve up. Year to date, I'm at 41.79%. This is verified through the United States Investing Championship. If you want to go to their website and you can see my name on there, I do that just so I can verify it by a third party, not me just screenshotting, so people know that I don't just talk a book. I trade what I say I trade, and I do what I do. Okay, so for me personally, I'm still looking to just be very, very diligent as far as risk management goes. It's a bullish market. I'll find names that are setting up, getting tight. I'll trade those. I might go smaller size. I might be a little bit more aggressive in profit taking, and that's really just because I'm doing already really good for this year. Last year I finished at 45%. It's October 1st. I'm already at 41%, and I have minimal risk right now exposed to the market, right? You get into a couple high beta names and you can do very well. So last month, the S&P 500 outperformed me, but not by much at all. I did, I think, 2.79% or maybe just slightly above that. And then the S&P 500 did 3.1. And this right here was pretty much 50 to 60% in cash, almost the entirety of the month. So you might say, oh, well, if you're in 100% invested, if I was 100% invested, there'd be some of those names probably would have got hit and I'd probably be floating around the same, maybe a little bit higher, but I do like the ability to just not take on a lot of risk when I don't need to. Now, let's talk about the market conditions and what I'm bringing up. First and foremost, this is the amount of S&P 500 companies, and we're right here right now in the blackout period, and these can act as stabilizing flows and be beneficial to the overall market. But you can see we're entering into the kind of peak of the blackout period as we're also moving into Q4 earnings season. As far as the CTAs go, we are still at these elevated levels. Remember, these guys can become sellers just like vol control funds at these elevated levels. And that's where we can potentially see, one of those 2% down days that we haven't seen in 113 trading days that can really freak out markets. But that's most likely going to happen when the conditions actually deteriorate. They have not deteriorated yet. And by deterioration, I mean that we get and stay under the gamma flip line, not just for one day like we did just the other day, but that when we stay under the gamma flip line, that's where volatility can really increase because it forces dealers to sell into that selling. They'll buy into the buying. Volatility is elevated. So right now our gamma flip line is about 66.20. Remember, it's a zone. It's a zone. It's an area here. So when you get into near these levels, you can see volatility pick up. But we're above it right now. So we're in a place where what? Dealers look to buy the dip, sell the rip, buy the dip, sell the rip, okay? As far as the weekly implied move goes, we're just about a stone's throw away from that, so it looks like we're trying to go for that tag, 67.30. The lower expected move is at 65.57. That's for the week. For the day going into tomorrow, we're looking at about 67.44 down to around 66.78. Now, for the monthly implied moves for the S&P 500, mark them on your charts, 69.45, and the lower is 64.31. So this means the S&P 500 is pricing in a potential move to 69, I'm just going to say 50, okay? And then the lower expectations for the month is 64.31. If we close within this range, that is well within the market expectations, okay? What's the quarterly expected move look like? For Q4, the market is pricing in a potential move up to 7193. That would be outside of 7,000, and I want to reiterate this because this is an important level to watch, and I'll explain why. Then, potentially, right, 6183 would be the lower quarterly implied move. So, if in the next, final months of this quarter, if we were to break down for some reason down to 6,200, right, fast, say if we just snap down there, know this level because a lot of people would be freaking out. Fear would be increasing like crazy, right? But that would probably be a great idea, potential Santa Claus rally into. That 6,200, actually, if you go back to the S&P 500 chart, 6,200 would be right back into this range, which is basically retesting these highs. So if that happens in the next 3 months, which I'm not counting for that to happen, but for whatever reason, if we get one of these kind of shocking moves, whatever, be prepared. Be prepared because when we break through the quarterly implied move early within the quarters, it's been a great buying opportunity for longer term holders, right? Or investors, okay? Instead of freaking out and then selling, like those are the important levels to really know. Okay, on the flip side of that, you got to also kind of understand that, if we start creeping up into these areas, that could be a time to reduce more. Now, I wanted to really quickly talk about, we did have the JPM caller come out, and it came out at like 10:46 or something like that. And then all of a sudden it was changed again. I don't know. It seems like a cluster every time that they do this, but the original order 6955, that's the short call. 62290 was the long puts, and then 5310 was the short put. So you can mark those on your screen if you want them. I'm going to give you the updated ones. I just went the updated because I didn't want to have to explain myself to a bunch of people again if it needs, when price comes up there. But I noticed that the same thing happened last quarter, and this level still remained important. So the new levels, right? This is the actual JPM caller, 7,000 for the short calls, okay? 63.30 and then 53.40. Now, this is not a prediction is where price goes, but it is very critical to know that there's going to be dynamic hedging that really kicks into play when you are around these specific levels, if we can get to these specific levels. For example, if price wants to come into 7,000, this level, well, then you'll probably see dealers selling into that, and it can act as somewhat of a pin or potential resistance and come back in. That is very common. We saw that last quarter where it came into it, it broke back down, it came back into it, it broke back down, and then finally it kind of squeezed outside of that level, okay? So 7,000 for the quarter would be the level to watch. Now, that would be to the upside. For the downside, 63.30 as it stands. Okay. Now, if I look at the net gamma, you can see traders are actually still reaching out to 7,000. Then you have 6,800, and then you have the 6,700 level here, which has been the call wall. So we'll see what this looks like. If price kind of comes in a little bit under this, I would imagine this becomes the call wall again. But you can see there's still a lot of reaching out into these areas. So anything, if we can hold above this 6,700, if we can hold above that, that opens the door for 50 to 100 points higher. Now, if we start crossing below it, right, we got to start looking for what there is beneath us. And right now at this current moment, I don't really see much going on. So we got to look at other various levels outside of the gamma exposure and so forth. If I take a look at the direction of the 5-day moving average amongst SPY, Q, IWM, semiconductors, biotech, DIA, one thing has stood out to me and has been one thing that I've been talking about, and that's when we turned red over here and yellow, red and yellow. But while that was happening, semiconductors actually remained quite bullish, and they did not actually turn red whatsoever. And this, as I priorly discussed, is if semiconductor holds up, that could be quite bullish for the SPYs and the Qs. Now, if semiconductors were to break down, this would have came right back in most likely, because it's a big weight. Everything right now is above a rising 5-day moving average. Biotech continue to move higher. DIA is rather flat, but it is holding above. IWM, it's rather flat. It's coming from this decline, but it's holding up here too. And then you have Qs still holding up higher, and SPY there as well after we got our first initial day here in October. Going into tomorrow's trading session, the SPY on the 15-minute time frame, our daily implied move is generating around 672 to 673, and beneath us 664 to 663. I went ahead and anchored a VWAP to the month start over here. So this is going to be the monthly anchor VWAP for October. It's bullish if we can remain above it. We haven't even tagged it yet. So sometimes the first reaction, you get the biggest move from it. So perhaps if we're going to go and tag this upper weekly implied move, but we don't make it there early in the morning and price starts to sell off, watch this, because price, if it starts seeing strength from it, it could be just a little fake out to go tag that upper weekly. Now, if it breaks down and this thing starts flattening out and turning down, and we can't break back above it, yeah, then you have to wait for it to turn back around and start to see a little bit more positive, positive incline versus, a decline, because then you're kind of putting yourself in a situation where you're fighting a trend based off of the VWAP. Week-to-date VWAP, we are still above there too as well, and we're above that rising 5-day moving average. As far as the weekly implied moves go, 653 below us, and then we have 670 above us, which is right there pretty much, okay? If we get there tomorrow, I wouldn't imagine we'd go pretty much any further than this for the entire week. It's very common that when we get to these levels, we just doodle around it. Sometimes we reject from it, but it's very common to just doodle around. Alrighty. The last thing I just want to close off in saying is, one, thanks to all the Patreon people that have been signing up, Discord. If you want to check that out, it's $16 a month. And like I said on the prior video where I made a more in-depth what I do on this, you can go watch the end of last video if you want to see that. I wanted to share this. I'm now having the alerts start to come through, not for all the members yet. I'm still testing it, but it's pretty cool, man. So I look at these expected moves all the time, and now I have an alert channel that's saying that it'll give us when expected moves are tagged in real time. And I saw this come across my screen. It was a weekly 2 standard deviation expected move for Dropbox, and I was like, oh, I'll apply a level over here, and look at what the price did. It came into it, right? Boom. And then we saw a little bit of a pop from it. Now remember, I think of everything in terms of a distribution curve. So 1 sigma moves, right? 1 standard deviation, 68% of the time. So you're going to get a lot of daily, alerts. And then 2 standard deviation, 95% of the time. So, if we break through the 2 standard deviation move, there's a high probability that we come back in. And, it did today. I don't know where it's going to end for the week, but I think that this is going to help get more names in front of people's faces from a various, large group of stocks that maybe are tagging their weekly implied moves, maybe broke down significantly, quickly, and then it might show opportunities when you pull these individual names up for various traders, swing trading, day trading, whatever it may be. If you want to check it out, like I said, $16 a month. That's only one of the many, many features that I'm going to be including. It's not there yet, but it should be this month. I'll see you on the next video. See you later.